Hello, my friends, and welcome to my January FOMC debrief. In a word, this FOMC was, without question, hawkish. But before we get into what happened, let's level set a little bit. So the last meeting we had was the December FOMC, and that meeting was dovish. It was dovish because it was at that time that Chair Powell clearly signaled that rates were as high as they were going to go, and the next move would be a cut. Now, since then, risk assets have rallied a lot, and the markets had priced in a very aggressive rate cut cycle. Heading into the meeting today, markets were thinking as many as 6 cuts this year, and not without reason either. So the data of the past few weeks has been decisively soft landing. So GDP continues to grow above trend, unemployment remains low, and most importantly, inflation, core PCE, which is the Fed's favorite measure of inflation, has been bang on at 2% for 6 months. So in addition to that, we've had a number of Fed speakers over the past few weeks come out and talk about how they look at the world through the lens of real interest rates, which is nominal minus expected inflation. So as inflation is right on target, as growth continues to be solid, many anticipated, including myself, that the Fed would begin to gradually cut rates to make sure that they don't over-tighten, to make sure that real rates don't continue to rise as inflation expectations decline. So that brings us into the meeting today. Now, the first point as to why I think the meeting was hawkish, was that Chair Powell unequivocally pushed back against a March rate cut. Let's listen to what he said.
We're going to be data dependent. We're going to be looking at this meeting by meeting. Based on the meeting today, I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that. But that's to be seen. So I wouldn't call, when you ask me about in the near term, right, I'm hearing that as March. I would say I don't think it's probably not the most likely case, or what we would call the base case.
So central bankers are a bunch that don't really give you straight answers. What you just saw was as straight an answer as you ever get from a central banker, saying that there's no way I'm going to cut in March. Now, I think many people in the press corps found this to be strange because, by all accounts, it seemed like inflation was already under control. As we discussed earlier, core PCE has been at 2% for 6 months. And Chair Powell acknowledged this. He acknowledged that the data has been good, but he wants more good data. So 6 months is not enough for Chair Powell, maybe 7 months, maybe 8 months. I'm not sure. Many people ask him about that, but it seems, my sense is that he is basically keeping the doves at bay, and he really wants to make sure that they don't embark upon an easing cycle too soon. Otherwise, you might have inflation reaccelerate, which is exactly what happened in the 1970s, the last time we had an inflation problem. Now, my guess is that he understands that once he starts cutting, the market is going to take that and run with it and going to continue to price even more aggressive rate cuts. So he seems to try to be holding interest rates as high as he can for as long as he can. But I don't think it's really going to matter. What simply happens is that the market will start pricing in May cuts to higher degrees and simply just push the cutting cycle forward a little bit. So I'm not sure if a couple months really matters all that much. But in any case, I think the market saw that the Chair Powell is not cutting in March, interpreted that as hawkish, and reacted accordingly. So you saw stocks sell off, and we saw interest rates rise a bit above the curve. Okay, that's the first thing. Now, the second thing that I thought was hawkish was less obviously so, and that has to do with the discussion on tapering quantitative tightening. So as we all know, the Fed is shrinking its balance sheet. From the Fed minutes, we also learned that the Fed is talking about tapering QT, that is to say, slowing down the pace that it shrinks its balance sheet. Now, many market observers were listening to this and thinking that, maybe the Fed might stop QT very soon. Over the past few weeks, we've had a number of Fed speakers come and present their viewpoint as to when they should taper, and I have written about this. One Fed speaker thought that they should taper when the RRP balances are very low. And if you look at the RRP balances, they've been declining very aggressively over the past few months. Initially, let's say last June, they were above 2 trillion. Now they're about 600 billion. And so there were some people on the street who were thinking that, if the Fed starts tapering QT when RRP is low, that could mean a taper as soon as March. But that doesn't seem to be the case. So Chair Powell said that, we talked about shrinking the balance sheet this past meeting, but for the really big discussion, we're going to have that in March. And from my perspective, if you're having a really big discussion in March, you're probably not going to be implementing it at the same meeting. So again, my own view is that QT taper won't start until Q4 of this year. But to the extent that there were some people on the street thinking that you would taper in March, that has to be pushed further out into the future. And so on the margins, I think that's also a bit hawkish as well. Now, going forward, this sets up the March meeting to be a really important meeting. It's going to be important in two ways. First, now, Chair Powell acknowledged during the press conference that inflation has come down faster than expected. So by that logic, then, we could actually see the Fed's dot plot in March have more than the 3 cuts this year that were guided towards in December. So the dot plot can be more dovish in March than it is in December because inflation has been progressing faster, progressing towards 2% faster than expected. And secondly, of course, we're going to have a lot more to discuss about quantitative, the tapering of QT. So we could either have that at the press conference or more details could be leaked in the minutes of the March FOMC meeting. So that's definitely something to look towards in a few weeks. And I will be back then to talk about it. And that's all I prepared. And we'll be back this weekend with Markets Weekly. We'll talk about the QRA and other stuff as well. All right. Talk to you all later.